In this video, I'm going to show you my formula and how you can retire early on Palantir or any stock that you choose running the wheel strategy. Stick around because I'm going to show you all the tips and all the strategies and technicals that I look for a solid stock to find a bottom and a top. This way you know exactly how to enter and exit consistently to make profits. This way you can retire and let your money work for you. I'm going to show you guys how to do everything start to finish on Palantir in this video. Let's get started. This is something that I teach my students in Discord consistently, how to evaluate a company, their fundamentals, their cash flow, which indicators, and how to use them to gauge where you should be entering and where you should be exiting. When I found financial freedom, I told myself I would help others do the same thing. So if you like this video and you want to learn even more of what I'm teaching here, I would love to help you because this is just one of the hundreds and hundreds of strategies I have, whether it be bullish or bearish, and I would love to help you consistently make profits like the students you see on the screen. You can sign up at investwithcorey.com. The link is in the information box below. Just click on training, book a call with my team and I so that I can get started working for you to help you grow your portfolio, and I look forward to seeing you real soon. So first thing we want to do is we want to look at Palantir, specifically in this video, and we have to gauge if this company is profitable. Now, we do this on stocks that we don't understand or don't know about, or maybe we're just hearing about for the first time. We want to make sure it's safe. We already know that Palantir is very safe, and not only that, is a very strong company. But when we look at fundamentals for a company, we have to look at price to earnings, which we can see on Palantir is quite high. It's been fluctuating between mid to high threes all the way to 500, which means people are paying 500 times their earnings to buy this stock. Typically, when you look at price to earnings, you also want to look at another metric called price to sales, which will also gauge a company's projected or estimated price to earnings eventually. It gauges where a stock is likely to be. It shows you a company's potential. So when you can't find a positive price to earnings, which is pretty much anything under 50, which is decent, under 30 is great, under 20 is stellar. If the stock is not below 50, then you have to use price to sales to help gauge future growth and expectations and potential of a company, which is exactly what I'm going to show you how to do right now. When you look at a company and you want to gauge their potential future, like I showed my students in Discord and made videos on YouTube showing SoFi with a price to sales of 2 and said that they're likely to double or triple because most companies move towards 6 to 10 when they're in aggressive growth. And SoFi went to 6.5 when they achieved price target of $16 to $18 a few months back. What we're going to do is look at the market cap, which is basically 220 billion. And then we're going to go down and we're going to look at more financials. And we're going to take the 220 billion and divide it by their total revenue trailing 12 months. When we look at that, we see 2.87. So let's just say 3 to give us a more even number here, make it easier to understand. We're going to take 220 and divide it by 3, giving us a price to sales of 73. This is actually very high. Apple's is 20, which is pretty good. Anything below 20 is extreme growth. SoFi had 2, now they have 6. So now that their price to sales is not very good and their price to earnings is not very good, we have to look at other things like cash and cash flow, EBITDA, profitability, and overall projected growth, guidance, and we have to look at the EPS on earnings, and then we have to understand the fundamentals of the company. Palantir has picked up many contracts with the government, one being almost $500 million with Project Maven, so they have commercial and government pretty much near 50-50 split. So if there's geopolitical issues, they will do very well with the government side, and if everything in the world is peachy and great, they will also do very well due to their high commercial business, and we can see their growth right here on the charts. So let's look at their total revenue. They're getting close to $1 billion a quarter, and they have $3 billion trailing 12 month. Gross profit, $652 million a quarter, $2.3 billion trailing 12 month. Very good. Operating income, much smaller, but trailing 12 month is still very high. Pre-tax income, they're making almost $100 million on average a quarter and $500 million a year pre-tax income. Net income after tax is almost $500 million a year. Very good. I would like to see this number go up, and their number numbers are predicting that is very likely to happen. Their EBITDA is also positive, which shows a lot of strength. And when a company has a lower price to sales, it's great. When it's higher, it's not so great. And in Palantir's situation, even though the price to sales is high and the price to earnings is high, it shows the EBITDA is very strong and the net income and profitability is also very strong, showing growth. When we look at the balance sheet, this will give us a great indicator of the stock. We can see their total assets cover liabilities almost 6 times over. We can also see their net debt is negative $5 billion. Whenever you see a net number like debt, net debt, and then there's a negative beside it, that means it doesn't exist. Meaning, essentially, Palantir is sitting on $5 billion in cash. This is critical. Their price to earnings and their price to sales might not be ideal, but their profitability with pre-tax and net income, their overall assets to liabilities, and $5 billion in cash show massive and substantial money management qualities of this company, have had to bring money in and keep debt down, which is critical for a company to have a better PE ratio and a better price to sales ratio. Now we have to look at cash flow. We're going to look at the cash flow and see if it lines up. We can see that $500 million per quarter, 1.15 billion for the trailing 12 month, as they've increased exponentially from as little as 0.20 million all the way up to 460 million. Look at this growth. This is incredible growth, 326% in a year. And since this year to date, even with all of the downside in the stock market, Palantir has 23% year-to-date growth. When we look at free cash flow, one of the strongest indicators, it shows $500 million in free cash flow, exponential growth, and 1.14 billion in trailing 12 month, which is likely to go up on the next earnings and the earnings after that, because they've been beating every earnings call, which you can see right here. They've been beating by 10 to 20% per earnings, which is incredible growth, exponential growth. Does that mean that they are worth the current price? Well, if you're considering future guidance, yes, but it really depends on the condition of the market, the sentiment, and right now they have been doing very well. When we look at the net debt, having $5 billion in free cash with no debt at all, and $1 billion, actually over $1 billion in free cash flow and cash from operation activities, they have enough assets to cover all liabilities, almost 6 times over, plus the $5 billion in cash. They have great revenue, operating income, pre-tax income, net income, showing great growth and profitability, and their EBITDA is also extremely strong. When you couple all this together, we have a very strong recipe for exponential long-term growth. So what we need to do now is we have to look at the Bollinger Bands and some different indicators that I look at to figure out where is the likelihood of the bottom going to be and the top, so we can enter. Because remember, when we are selling puts, we want to sell puts where we're unlikely to be assigned but still get good premium, and if we're assigned, we catch the bottom. So we want to make sure that we're right around the bottom while we are aggressively selling puts, so that if we are assigned, the stock is likely to start moving upwards, and then we can begin selling covered calls to exit. So when we look at Palantir, we can see that it is above the 100-day moving average, and the 10 is crossed over the 20-day, but then it dipped down here. It resisted the 100-day moving average, which means that we are still in an uptrend, although the 10 is crossed below the 20 and is resisting right here. This is the crossroads on the 1-hour chart. This stock could come back down and retest the 100-day. When we go to the 4-hour chart, we clearly see that we are at a crossroads because of the fact that the 10-day is coming down in the 4-hour to touch, but they're both in the proper order. 10 is above the 20 and they're both above the 100. We can see though that everything looks good. 10 is above the 20 and they're both above the 100. So if Palantir can stay above $91 or $92, then we are continuing on the uptrend above the 100-day moving average. When we look at this stock right now, we have to gauge the price action of the stock, which is figuring out where the stock tends to be most of the time. We can see there was a lot of growth here, and we can see the stock lived between 65 and 81. So there was a $15, $16 price range going from December all the way to February. So for a month and a half, it stayed in this range. Then it jumped all the way up, and then it sold off. And it broke the downtrend recently recently on April 10th. So what this shows us is that the stock is capable of reaching 125. This is its peak. And anytime you see that, that becomes the ceiling. So the resistance is 125. So we could see the stock potentially reach highs of 110 to 125 very soon in the near future. So that would be our safe bet where we're going to be selling covered calls a lot of the time. But we also want to look for a price range that's a little bit closer. So we're going to find the two ranges right now. We can see that the stock since February 25th till now, which is almost 2 months, has been between 73 and 98. So a $20 price range in here. And I'll show you the box that we draw to find this, and then we do Bollinger Bands. So right about there, we've had a few dips below. These are what I like to call the assignment opportunities. We are going to sell put options based on this price action, and these dips are the times you'd be getting assigned. In 2 months, as you can see, you'd only be at risk of assignment twice, 2 weeks out of 8 weeks. So very low assignment rate if we were to play it with this strategy. You can see that there was only a time window of Monday the 10th to Tuesday the 11th. By the time you get to Friday, you would not have been assigned. Let's zoom in and look. This bottom right here is 79. We'd be selling 79 or $80 puts, which means on Friday here, the stock was above 80. It was actually 81, so we wouldn't be assigned. Over here, the price dipped on Friday, so we would have been assigned here, but the following Wednesday and Thursday, the price was above. So realistically, there would only be, out of 8 weeks here, there'd only be 1 week of potential assignment. And look where the stock would have went after this assignment. It would have went from 74 and you would have been assigned at 79 hypothetically, and the stock went back up to 98. There would be a $2,000 profit in this trade based on this strategy. So you can see where the price action is. And on covered calls, we would be looking to sell covered calls around 93 to 95. And right here, the stock comes above on Monday, which is the day we would be looking to sell covered calls. So if we would have sold a $95 covered call right here on a Monday or Tuesday, we can see this Friday, it would have expired worthless because the stock was 90. We would have sold again this Monday. The stock would have been down here at 85, worthless again. This Monday would have sold 95 again, or maybe 92. And we could see that this Friday, it would have been completely worthless again. Another 95. This Friday would have been worthless again. Then Monday, the stock would have jumped up. We probably would have waited for it to come down and then went above, which is what I do. We would have waited for the stock to run on this Monday. It would have dropped. And once it gets down to 92 and it comes back up and it resists 93 again right here, you got like a double peak. I would have went above and sold a 98, and then it would have expired worthless. So essentially, the only time you would have sold a covered call at 95 and been assigned would have been if you would have sold it right here, but then you could see Wednesday it dipped back down to this week, and you still wouldn't have been assigned on a 95 because we just closed this week at 93. So there would have been no opportunities to get assigned. We are at the top right now of this price action for 2 months. So the stock is likely to continue and come up into this range here. But where we are actually safe now is $80 range. So what we're going to do is we're going to do 2-week options at $80, or we can do 1 week at 85. If we were to go to Palantir right now, we are going to look at put options for next week. I've showed you the price action, 1 week at 85, 2 weeks at 80. If we go 1 week at 85, we are going to be making, so we can see the put options for next week at 85 are $96, a delta of 16. So what we're going to do is we are going to sell these put options at 85. I'm going to stagger them. So what I'm going to do is I am going to sell 10 of the 85s, and I'm going to collect $96 each, which is $960. And then I am going to sell 10 of the 80s to help give me a much better dollar cost average of $82.50 minus the premium collected, which is going to put me somewhere in the range of 81. We can actually calculate this to be an exact 10 contracts at 85, 10 contracts at 80 gives us $82.50. And then we also have to look at the fact that we're collecting 96 on some of the puts. And then we're also collecting 40 on the other puts, giving us a dollar cost average of $81.14. So we're going to acquire 2,000 shares at $81, which is really good for Palantir. It's near the bottom. As we can see, $81 is way down here at the support. Only twice as it dipped below that. So what we're going to do is we would sell those, and we would do this every week till we're assigned. Let's say we did this. So let's say we did this for 4 weeks and we got assigned on the 4th week. We are going going to be collecting $960 plus $400 per week times 4 will generate $5,500 for the month just in those puts alone. Now, if you want to play this a little bit more aggressively, you can also sell 82 or maybe 83 or even go to $87 puts if you're more bullish. If we go to $87 puts and do 10 of those, and then we collect 85 puts, which we can see right here, and we do both, then we are looking at roughly about $2,250 per week. So if we do it this way, times 4, we can generate $9,000 in our first month. We get assigned in this first month. As we can see, only one opportunity over 2 months to get assigned. We'll do it in the first month. We take Palantir, and what we're going to do is now we start selling covered calls. So the stock comes down here, we get assigned, and the stock is kind of bouncing around this area. We wait for it to recover for maybe a week. And as it sits in the $80 range, we will then sell covered calls up here in the resistance at 90 or 91, which is about $10 out of the money, which would be the equivalent of selling a 102 call option right now. So if we go out 1 week and sell a 102 call option with 20 contracts, we would be looking at collecting a premium of about $16.87 per week. So $16.87 per week. And let's say we go 2 months without getting assigned because I just showed you 8 weeks. There's one assignment. We could do it that way, or we could just look at doing it for 1 month. Virtually going to be the same thing. $16.87 times 4. We make $67.48. We have an entry cost that we got assigned on at 85 and 87, giving us an average price of 86. So we have this plus $9,000, which is $15,748. We have an average cost of $86 and we're exiting at 91. So 91 take away 86 is 5 times 2,000. So we made $10,000 plus we made the $15,748. So essentially in 2 months, we would make $25,748, which is $12,500 a month. If it took an extra month to get assigned, well, then let's say we would just add in another $1648 times 4 on the covered calls, which means $32,340 divided by 3. So essentially, it's $10,000 to $12,000 a month. I like to be more reserved, so I say this strategy is usually between 9 to 11. So right around 9 or 10,000 on the very safe side of things. If the stock keeps consolidating, you keep selling covered calls because remember, we got assigned at 87 and 85 and we're selling calls at 91. We can't lose money unless the stock just keeps dropping. And that is unlikely, but if it does happen, we can go below our average cost if the stock starts dropping down here, and we can wait for consolidation, go below, and sell puts. We would sell some puts down here, and then as the stock recovers and starts to come back up, we would buy back for a profit, sell a put, stock goes up, buy back for a profit, sell a put. It would help us build more revenue there. But all stocks in the long term of things go up. Nothing is perfect, but this is what happens. A strategy that nobody really talks about is what to do if your puts go deep in the money. Well, if your puts go deep in the money, one little strategy that I like to do is I like to chase the loss. Most people are loss avoidant. They like to avoid losses and they run from it or try to avoid it. They don't take it head on. I like to engage and chase the potential loss, which is using a strategy to bring in premium. This way I can lower my risk on the puts. If you like what you're about to see and want to see a full video just on this strategy, comment below. It's something I teach my students in Discord. It's very important. And if you want to join Discord and learn more of these strategies, like I said, this is just a very select few out of the dozens and dozens that I have. You guys can join my Discord, 2 weekly coaching calls, take my trades, follow my trades, one-on-one coaching, boot camp, masterclass, everything you need to become profitable and work your way into retirement quickly and effectively. All you have to do is click the link in the information box below, investorcorey.com, click on training, and book a call with my team and I so I can help you. I look forward to seeing you real soon. This is a strategy that I recommend you also understand. If you want to see a full video, like I said, comment below. This is just a brief explanation of it. If you have a put option that goes into the money, for example, you sell on Palantir at 85 and Palantir comes all the way down like this to 77, 78, you are going to have to roll this 85 down to 70 78. And if you're only going out 2 weeks, it's likely to be a $200 or a $300 debit, maybe a little bit more because you're going down $6. So it's actually going to be more like $600, $700 worth of debit. What you will do is you will say, okay, we got an $85 average cost. So what we're going to do is we're going to go at 85 or maybe 84 because the stock is down here at 78. And we're going to sell an $84 call option 2 to 3 weeks out. And then we're going to roll our 85 put 2 to 3 weeks out and down to 78. The call option is going to offset the cost of the debit that you're paying to roll out and down. So essentially break even, you're just rolling your put from 85 to 78, giving you less risk, and the call option is covering it. And if the stock runs and you get assigned at 85, you're essentially just giving up your profits to prevent losses. So you get out at break even, but the call premium is yours to keep and the put premium is yours to keep. You break even on the stock. So essentially, if you collected 150 for the put, then the stock goes down to 78. You're going to collect a premium on the call to cover the debit, rolling out and down on the put to 78. So that's break even. If the stock runs to 85, you get out at break even, but that initial put premium of 150 is yours to keep, and you were able to lower your average cost. If the stock was to go down again to say 72, well, then you'd have to roll out 3 more weeks for a $600 debit to 72, or a month maybe at 500, depending on the situation and volatility and different option premiums. But then you would sell another covered call at 82 or 83, and you'd go 3 weeks out, and this would give you a free debit. So you would take $100 or $200 loss potentially on the top end if you were to get assigned on the call, but you're covering all of your cost and you're rolling your puts out and down basically free. This way, if you get assigned on the puts, you're getting assigned at 78 or 73 instead of 85. And then if the stock does run above your call option to 85 and you sold an 83, well, it's a lot easier to roll a call option out for $200 or $2 than it would be to roll a put out and down for $10 or $6. So essentially, this is how you offset these type of situations. No one talks about this, but this is how you chase and take on risk and losses up front to prevent yourself from having a disaster, because this is how options work. If you want to see a full video on this, comment below. I want to show you how to gauge Bollinger Bands. This is another strategy I use in tandem with this strategy. We're going to set up the Bollinger Bands and we're going to use a standard deviation of 2. I look at it with the 1 hour and the 4 hour chart. We can see 20 SMA, standard deviation of 2, and we go to the 4 hour chart, which gives us a weekly and bi-weekly gauge of the stock. And we can see the bottom of the Bollinger Band is 87.01. The top is 98, very close to what I have gauged with the other strategy. When we go to the daily chart, it encompasses a lot more data. This is going to give us almost a month's worth of average data, meaning weekly, this is extremely safe. And you can see in the month, it is unlikely to go below 75. So if we're selling 80 every single week, it's unlikely the stock would drop to $80 over $13 in 1 week. And we can see the top at 101. So this is 96.6 or 96.7% likely, meaning in a month. When we go to the 4 hour chart, that gauges the weekly and bi-weekly, meaning the chances of the stock going below 87 is 96.7% unlikely. So when we go to 85, we are sitting around here, which is highly unlikely to happen. This is 85 right here. So this is more like 98%. If we go to the Bollinger Bands and we do standard deviation at 3, this is a 99.1% likelihood, 84.01. So at $85, we are almost 98% or more unlikely to be assigned on that. When we look at the top of the Bollinger Bands, 97% unlikely to go above 98, and that's right now. If the stock was to dip down here and we were to get assigned, the chance of it going back up in the same week or two above 95 or 98 would be very unlikely. It would be a 15 to 20 delta, which is very safe because we'd be Xing at a profit anyway. You can see in this video, these are just some of the strategies I implement into my portfolio and teach my students consistently. One of the many strategies. I have a plethora of strategies that I use in the stock market, this just being 2 or 3 of them, and how I gauge companies. And you can see here, we can consistently make about $9,000 to $10,000 a month with this strategy on Palantir, because the big key is to find a good stock that's profitable with good growth and use my strategies to find the top and the bottom and use the price action to understand where the stock is likely to go. And in this situation, we found that that selling puts on Palantir between 80 and 85, and call options between 93 and 95 were the optimal premiums and the optimal price action to avoid assignments early and make the maximum amount of profits when we enter and exit. Timing the bottom as best as we could and the top the best we could as well. And we found that with my price action showing you how to gauge the overall movement encompassing over 60 days of data. Hope you guys enjoyed this video. I look forward to seeing you on the next one and in the Discord real soon. You can sign up at investcorey.com. Links in the information box below. Take care of yourselves. Happy Easter. One love, fam.